Hi, this is James Shugg with Westpac London's end of day report for Friday, November the 4th. Well, equity market sentiment started off the day in modestly positive territory. The Greek referendum had been abandoned. The G20 meeting was proceeding, maybe with the prospect of achieving something. So sentiment was a little bit more positive than it had been earlier in the week, but it didn't last. I'll run through the various reasons for that now. Firstly, on Greece still, the confidence motion or vote in the government of Papandreou will be held at 10 p.m. London time tonight, so that's 9 a.m. Sydney time. That's going to be a source of ongoing market angst, political uncertainty in Greece at a time when the bailout package hasn't yet been fully accepted, it seems, by the Greeks. Could be a yet another stumbling block to the EU plans that were agreed last week actually being put into place, related to the haircut, 50% haircut for the banks to Greece have agreed to accept, but also the bank recapitalisation plan and the expansion of the EFSF. So that's one event to watch over the weekend. We had various PMI surveys, particularly in Europe. There were revisions to earlier published numbers, but they were weaker. So that set up the tone for a market to be particularly concerned about further evidence of recession in Europe. That PMI survey is now running at the level it was running in the third quarter of the 2008-2009 recession. So a very strong recession signal coming from there. The day after the ECB correctly says that a mild recession is in prospect for Europe, with an emphasis on the correct being emphasising the recession word, not the mild. In our view, it's going to be a deeper recession than just mild. Then we had German orders numbers, factory orders numbers, down 4.3% in the month of September, including a 12% plunge in orders from the rest of the Eurozone. That's scary. Yet more evidence that Europe seems to be grinding to a halt and going backwards already. We thought the recession in Europe might have started perhaps in the first quarter of next year, perhaps a stalled quarter in the fourth quarter, but if we get too many more numbers like that, it's pretty clear that's probably already in recession. Then we moved on to the US. We had jobs numbers there, an 80,000 increase in payroll jobs in the month of October, a bit stronger than our 65,000 forecast, but weaker than the 95,000, 100,000 consensus forecast for the payrolls gain. But there were favourable upward revisions which added another 99,000 to the August and September job counts. So it seems that the labour market was stronger in the third quarter, which is when the economy actually accelerated, but it seems to have slowed somewhat in October. Although my gut feel is that we'll probably see October revised up as well in the next report in November. I'll go into that in a bit more detail in another report. Canadian jobs, though, they were down 54,000 and unemployment there rose to 7.3%. Unemployment in the US fell from 9.1 to 9.0%. And that's pretty much the data wrap for the day. G20 really didn't achieve much, I'm afraid. Basically, they've agreed to expand the IMF in terms of the funds it has available, but haven't agreed how to do it, and have delayed that decision until the next G20 meeting in February next year. And they talked a lot about Europe, but that's basically it. And there were some initiatives related to humanitarian and I think it was food, agriculture issues, but apart from that, there's just the usual affirmations to do the right thing, but nothing more concrete, I'm afraid. So given all of that, we've had what started as a pretty positive day, it turned fairly negative. European markets down quite sharply. The FTSE did okay, just down 0.5% today, but the French market down 2.1% and the German market down 2.8% today. In America, the Dow Jones down 1.2%. This is just after 4 o'clock London, by the way, so the Dow's been trading for about 2.5 hours already. Down 1.2%. The level of the Dow is 8,897. Okay, commodity markets. We've got oil prices down 0.6%. That's $93.53 a barrel. Gold's down gold is $1,754 an ounce. That's down 0.6% as well, and also down 0.6%. I really must read these numbers before I actually read them out, so I could just say oil, gold and copper all down 0.6%, because they were. So moving on to the Aussie, it's at 1.036, pretty much unchanged from yesterday. Traded a range of a bit below 103 up to a bit above 104, but it's at 1.036 at the moment. Bit of a disappointing day today, really. I suppose G20's failure to do anything is because really they've got nothing left to do. Interest rates are at zero or close to in most of the major economies of the Western world. Fiscal policies run out. Any attempt to boost budget deficits now is probably going to be met with markets really pushing yields up, so it's actually counterproductive. Certainly that's the case in Europe anyway, maybe in the US, particularly if another rating agency downgrades the US from AAA. So let's watch Greece tonight, tomorrow morning Sydney time, and then we'll be back next week to see what sort of carnage or not that has delivered. Speak to you then.